Have you ever wondered how a country rich in natural resources like Peru has managed its economic growth over the years? Picture a land blessed with ample reserves of minerals, metals, and fertile soil. This is Peru, a diverse economy where mining and agriculture form the backbone of its financial structure. With a wealth of resources under its domain, Peru's journey of economic growth has been a fascinating saga. Let's delve in to understand how Peru's economy has evolved over the years, shall we? To appreciate the economic progression of Peru, we need to journey back to the country's early economic history. In the first half of the 20th century, Peru's economy was predominantly agrarian, with the majority of the population engaged in farming and herding. The country's natural abundance of fertile land and diverse climates allowed for a wide range of crops and livestock. Despite this, the economy was largely subsistence-based, with little surplus for trade. Simultaneously, mining played a significant role in the economy. Peru is rich in mineral resources, boasting vast reserves of copper, silver, lead, and zinc. These resources were exploited particularly by foreign investors, contributing to the country's export revenues. But despite the wealth beneath its soil, the benefits of mining were not equally distributed, leading to social inequality and unrest. The Peruvian economy before the 1960s was characterized by a lack of industrialization. While other nations were embracing the Industrial Revolution and modernizing their economies, Peru lagged behind. This was due in part to a lack of infrastructure and capital, but also to the country's reliance on traditional sectors like agriculture and mining. This lack of industrialization presented significant economic challenges. It limited the country's ability to create jobs and generate wealth, leading to high levels of poverty and inequality. The economy was also vulnerable to fluctuations in global commodity prices, as it was heavily dependent on exports of raw materials. In addition to these structural issues, Peru faced political instability and corruption, which further hindered economic development. The country's political leaders often prioritized short-term gains over long-term economic planning, leading to a lack of consistent economic policies. But as we will see, the Peruvian economy was poised for change in the coming decades. These challenges of the past were not to be perpetual, as Peru began to take steps towards economic reform and modernization. The changes that lie ahead would set the stage for the economic transformation that we see in Peru today. The 1960s and 1970s marked a period of significant economic reforms in Peru. During this time, the Peruvian government sought to reshape the nation's economic landscape, introducing a series of policies aimed at promoting social justice and reducing economic inequality. One of the most significant reforms was the land redistribution policy. The government, guided by the belief that land ownership was central to social and economic inequality, began redistributing land from large estate owners to peasant communities. This bold move was seen as a step towards rectifying historical injustices, yet its implementation was fraught with challenges. In the industrial sector, the government made strides towards nationalization. Key industries such as mining, oil, and telecommunications were taken over by the state in an effort to retain more of the wealth generated within the country. The nationalization of industries, however, was not without its problems. The lack of competition led to inefficiencies and stagnation, while the sudden shift in ownership created uncertainty and instability. The government also attempted to kickstart industrialization, hoping to diversify the economy and create jobs. Factories were built, and efforts were made to develop domestic industries. However, these attempts often fell short as the country lacked the necessary infrastructure and skilled workforce to support a robust industrial sector. At the same time, the government implemented protectionist policies to shield domestic industries from foreign competition. While these policies were designed to foster local industries, they often led to a lack of innovation and competitiveness in the global market. All these reforms were well-intentioned, aimed at addressing social and economic inequalities. However, they often led to unintended consequences. The redistribution of land led to conflicts and reduced agricultural productivity. The nationalization of industries resulted in inefficiencies and lack of competitiveness. The protectionist policies hindered innovation and global competitiveness. Ultimately, these reforms led to economic instability, high inflation, and stagnating growth. The economy became heavily dependent on the state, and when global commodity prices fell, the government found itself unable to sustain its economic policies. These reforms, while well-intentioned, led to economic instability, setting the stage for a new era of economic reform. The 1980s and 1990s were challenging years for the Peruvian economy. The nation was plagued by an economic crisis and hyperinflation that saw prices skyrocketing and the value of the national currency, the sol, plummeting. The economic turmoil was not an isolated event but rather a symptom of a broader spectrum of socio-political issues rippling through the nation. The situation was exacerbated by the global economic downturn, which led to reduced demand for Peru's exports and a subsequent decline in foreign exchange earnings. In response to these challenges, the government of Peru embarked on a series of structural adjustment programs in the 1990s. These programs were designed to stabilize the economy, reduce inflation, and put Peru back on the path to economic growth. The cornerstone of these programs was a commitment to fiscal austerity, which involved reducing public spending and implementing measures to increase government revenue. One of the key strategies under this austerity regime was the privatization of state-owned enterprises. This move was intended to reduce the fiscal burden on the government and attract foreign investment. The government sold off a range of businesses in sectors such as mining, telecommunications, and utilities. Trade liberalization was another significant aspect of the structural adjustment programs. The government sought to integrate Peru more fully into the global economy by reducing trade barriers and encouraging exports. This opened up new markets for Peruvian goods and services and attracted more foreign direct investment. Despite the hardship and public discontent these measures initially caused, they were instrumental in stabilizing the economy and laying the groundwork for future growth. They led to improved fiscal balance, a significant reduction in inflation, and a more open and competitive economy. In the long run, these structural adjustments have been crucial in shaping the trajectory of the Peruvian economy. They have helped to transform Peru from a country gripped by economic crisis into a nation known for its economic resilience and growth potential. These measures set the stage for a period of economic growth that would transform Peru in the 21st century. The 21st century has been a period of remarkable economic growth for Peru. As we moved into the new millennium, Peru continued to build on the foundation of economic reform laid in the previous decades. The growth rate has been impressive, averaging about 5% per year since the early 2000s. This sustained growth has not only boosted the overall economy, but it has also led to a significant reduction in poverty. In the year 2000, nearly half of Peru's population lived below the poverty line. But by 2020, that figure had dropped to around 20%. This economic success story has been driven in large part by the private sector, which has flourished under a more open and competitive economic environment. The private sector's increased role has been instrumental in creating jobs and driving investment, both crucial factors in Peru's economic growth. But let's not forget the traditional powerhouses of Peru's economy, mining and agriculture. These sectors have remained critical to Peru's economic health, even as the economy has diversified. Mining in particular has continued to thrive, with Peru being one of the world's largest producers of gold, copper, and zinc. Agriculture too has remained a vital part of the economy, employing a large portion of the population and providing essential goods for both domestic consumption and export. However, the story of Peru's economic growth in the 21st century is not just about mining and agriculture. Other sectors have also seen significant growth, contributing to the overall diversification of the economy. The services sector, for example, has expanded rapidly, bolstered by growth in areas like retail, telecommunications, and finance. Tourism has also become an increasingly important part of the economy, with millions of visitors flocking to Peru every year to experience its rich history, culture, and natural beauty. But even with these successes, challenges remain. Economic inequality is still a pressing issue, and while poverty rates have dropped, they remain high by global standards. Environmental concerns, particularly related to mining and deforestation, also pose significant challenges. However, with continued commitment to economic reform and sustainable development, Peru is well positioned to overcome these hurdles and continue its path of growth and prosperity. This brings us to the present day, where Peru stands as a testament to the power of economic reform and the effective use of natural resources. So, what can we learn from the economic growth of Peru? The tale of Peru's economy is one of resilience, adaptability, and strategic economic reforms. From the early economic history, we've seen how Peru has capitalized on its abundant natural resources to fuel its growth. The economic reforms undertaken in the 1960s and 1970s, despite their challenges, laid the groundwork for improved governance and economic stability. The economic crisis and structural adjustments in the 1980s and 1990s tested Peru's resilience, but also paved the way for significant economic growth in the 21st century. The private sector played a crucial role in this growth, demonstrating the effectiveness of a market-oriented economy. With its rich natural resources and a dynamic economy, Peru's economic journey offers valuable lessons for other resource-rich countries. If you enjoyed this video, please like, comment, and subscribe to Mr. Explainer for more insightful content. Thank you for watching.